Right here on page 8 of IRS Publication 590-B, there's a penalty clause that could cost you $5,000, $10,000, or even more. And you have 72 hours to avoid it. It's December 28th, 2025. In exactly 3 days, 4 critical deadlines hit at once. Miss even one, and you could lose thousands of dollars you'll never get back. I'm not here to scare you. I'm here to walk you through exactly what you need to do before midnight on December 31st. In the next 20 minutes, I'm going to show you 4 things. Number 1, the IRS penalty that hits on January 1st if you forget one withdrawal. Number 2, why your Social Security raise might actually make your check smaller in 2026. Number 3, the tax moves you must make in the next 72 hours to save thousands. And number 4, the scam that's stealing billions from seniors right now and how to protect yourself. Let's start with the one that could cost you the most. Required minimum distributions. If you're 73 or older and you have money in a traditional IRA, 401k, 403b, or similar retirement account, federal law requires you to withdraw a specific amount every single year. The deadline is December 31st. Miss it? The IRS can take up to 25% of the amount you should have withdrawn. That's not 25% of your account. That's 25% of what you were supposed to take out. But here's what makes this even more dangerous. Let me show you exactly how this works with real numbers. Let's say your required withdrawal for 2025 is $20,000. You forget. You missed the deadline. January 15th, 2026, you suddenly remember. Too late. The IRS penalty? $5,000. That's $5,000 you worked 30, 40, 50 years to save, gone because of a missed deadline. So who has to do this? If you turned 73 this year, or you're older, and you have money in any of these accounts, you must take an RMD. Now, there is one exception. If this is your very first RMD ever, meaning you just turned 73 this year, you have until April 1st, 2026. But here's the catch most people miss. If you wait until April, you'll have to take 2 RMDs in 2026, your 2025 one and your 2026 one. Why does that matter? Because taking 2 withdrawals in 1 year could push you into a higher tax bracket. Instead of paying 12% tax on one withdrawal, you could end up paying 22% on both. That's thousands more in taxes you didn't have to pay. So unless you have a very specific tax strategy with your accountant, don't wait. Get it done now. Here's the simple version of how to calculate your RMD. Step 1. Total balance of all retirement accounts as of December 31st, 2024. Step 2. Find your age on the IRS Uniform Lifetime Table. Step 3. Divide your balance by that number. That's your RMD. Most brokerages calculate this automatically. Log in, look for RMD, and they'll show you the exact amount. So that's the RMD deadline. But here's what nobody's talking about. There's another deadline on December 31st that affects every single person watching this video. And this one could actually make your Social Security check smaller in 2026. Let me show you what I mean. On January 1st, 2026, Medicare Part B premiums are jumping to $202.90 a month. That's an increase of $17.90 per month. Now, you might be thinking, okay, $18 more, I can handle that. But here's what that actually means for your Social Security check. The Social Security Administration announced a 2.8% cost of living adjustment for 2026. For the average retiree, that's about $56 more per month. Let's do the math together. Your Social Security COLA raise plus $56. Your Medicare Part B premium increase minus $17.90. Your actual net increase? $38.10. That's 32% of your raise gone before you even see it. And if you're subject to IRMA, that's the income-related monthly adjustment amount for higher earners, your premium could be even higher. Some seniors will pay $244, $349, even $594 per month for Part B. That completely wipes out the COLA. Your check could actually be smaller in 2026 than it was in 2025. So what can you do? First, review your Medicare plan during open enrollment. If you missed it this year, mark your calendar for October 2026. Second, check if you qualify for Medicare savings programs. These state programs can pay your Part B premium if your income is below certain limits. And third, if you're paying IRMA and your income dropped due to retirement or other life events, you can file Form SSA 44 to request a reconsideration. This could lower your premium significantly. Now, that Medicare shock affects everyone. But if you receive SSI, Supplemental Income Security, there's another critical deadline you need to know about. And this one is happening in 3 days. If you receive SSI, your January 2026 payment is arriving early. It's being deposited on Wednesday, December 31st, 2025. This happens because January 1st is a federal holiday. When the first of the month falls on a weekend or holiday, SSI payments come early. Now, here's the critical part most people miss. This is not a bonus check. This is not extra money. This is your January payment arriving before January starts, which means this single payment has to last all 31 days of January, with no second check coming. Here's the trap. When money hits your account on December 31st, it feels like holiday money. It feels like a bonus, but it's not. That money has to cover your rent, your utilities, your groceries, your medications for the entire month of January. All 31 days. Here's how to make it work. Step 1. Set aside rent and utilities the moment the deposit hits. Don't wait. Do it first. Step 2. Divide what's left by 31 days, not 4 weeks. January has 31 days. Your budget needs to match. Step 3. Plan groceries weekly instead of all at once. This keeps food fresh and spreads costs evenly. So that's the Medicare shock and the SSI timing. Pause. But here's the deadline that could cost you the most. Lower, serious. There are 3 tax moves you must make in the next 72 hours. Pause. Miss them and you could lose thousands. Let me show you exactly what to do. December 31st isn't just an RMD deadline. It's the final day for 3 critical tax moves that could save you thousands of dollars. After midnight on December 31st, these opportunities disappear for the entire 2025 tax year. You can't go back, you can't file an extension, you can't fix it in April. Once January 1st hits, it's over. So let me walk you through each one, starting with the move that could save you the most. This strategy makes sense if 1. You're in a lower tax bracket this year than you expect to be in the future. 2. You have cash outside your IRA to pay the tax bill. 3. You won't need this money for at least 5 years. If you're not sure, talk to a tax professional before December 31st. This is not a decision to rush. Second tax move, Qualified Charitable Distributions, or QCDs. This is one of the most powerful strategies for seniors who are charitably inclined. Here's how it works. If you're 70 and a half or older, you can donate up to $105,000 directly from your IRA to a qualified charity. And here's the magic. That donation counts toward your required minimum distribution, but it's not included in your taxable income. So you satisfy your RMD requirement without increasing your tax bill, which means lower taxes, lower Medicare premiums, and you're helping a cause you care about. Third tax move, tax loss harvesting. If you have investments in a regular brokerage account, not an IRA, and some of those investments lost money this year, you can sell them before December 31st to lock in those losses. Those losses offset your capital gains, reducing your taxable income. You can deduct up to $3,000 in losses against ordinary income each year. But you must execute the sale by December 31st. After that, it's too late for the 2025 tax year. Those are the 3 tax moves. But there's one more year-end deadline that has nothing to do with taxes. And if you ignore it, your family could face chaos. Let me explain. When was the last time you updated your will? If it's been more than 3 years, things have probably changed. You retired. Your kids had children. You moved to a different state. Your health changed. An outdated will is almost as bad as no will at all. So those are the financial deadlines. But there's one more threat you need to know about before December 31st. It's not from the IRS. It's not from Medicare. It's from criminals who are stealing billions from seniors right now, and they're using technology you've never seen before. In 2025, scammers stole over $10 billion from American seniors. That's not a typo. $10 billion. And according to the FBI's Internet Crime Report, seniors over 60 are the #1 target. But here's what makes 2025 different from every year before: artificial intelligence. Scammers are now using AI to clone voices, create fake videos, and impersonate people you trust. And it's so convincing, even tech-savvy people are falling for it. Here's how the new version works. You get a call. The caller ID shows your grandson's name. You answer, and you hear his voice. "Grandma, I'm in trouble. I was in a car accident. I'm in jail. I need bail money right now. Please don't tell Mom and Dad." It sounds exactly like him. The voice, the tone, even the way he says "Grandma." But it's not him. It's an AI voice clone created from a 10-second clip the scammer found on social media. And in the panic of the moment, you send thousands of dollars to a criminal. Warning: second scam, the fake Medicare card upgrade. You receive a letter in the mail that looks official. It says Medicare is replacing all paper cards with new plastic or metal cards for 2026. To get your new card, you just need to verify your information online. You click the link. You enter your Medicare number, your Social Security number, maybe even your bank information. Within hours, your identity is stolen, and your medical benefits are being used by criminals. Here's the truth. Medicare is not issuing new plastic cards. Your paper card is valid. Anyone telling you otherwise is a scammer. Here's how to protect yourself. Rule 1. Medicare and Social Security will never call you demanding immediate payment or threatening to cancel your benefits. If someone does, hang up. Rule 2. Never share your Medicare number, Social Security number, or bank information over the phone unless you initiated the call. Rule 3. Verify everything directly with official sources. Call the official numbers. Don't use numbers from emails or letters you receive. So, those are the 4 major threats before December 31st. The RMD penalty, the Medicare shock, the tax deadlines, and the scams. Now, let me give you the complete action plan. 7 things to do in the next 72 hours to protect yourself and your money. Number 1. If you're 73 or older, calculate and withdraw your RMD by December 31st. Number 2. Review your Medicare plan and check for savings programs. Number 3. If you receive SSI, prepare for your December 31st payment to last all of January. Number 4. Consider a Roth conversion if it makes sense for your tax situation. Number 5. Make charitable donations via QCD if you're 70 and a half or older. Number 6. Execute tax loss harvesting if you have investment losses. Number 7. Update your will and estate documents. Which one of these 7 are you tackling first? Type the number in the comments, 1 through 7. I want to see what's most important to our community right now. You now have everything you need. The RMD calculation, the Medicare math, the tax strategies, the scam warnings. You've worked your entire life for this money. You've paid into Social Security for decades. You've earned Medicare. You've saved for retirement. Don't let a missed deadline, a confusing rule, or a criminal take what's yours. Subscribe to this channel so you never miss another critical deadline or benefit update. I cover these changes before they hit the mainstream news. You'll know first. And tap that hype button for instant notifications. When a new deadline drops, when Medicare changes, when scams emerge, you'll get an alert immediately. Take care of yourself. You've earned a secure retirement. Now go protect it. We'll see you in 2026, stronger, smarter, and more secure.